Hey, this will be a video chart on XYTS. This one popped up on my radar today based on the volume. You can see big volume bar today, and when we scrunch up the chart, you can see that today's been the biggest volume it's had in many months. So it's one of these volume alert ones that's worth paying attention to see if there's any sort of follow through after today's action. Really, the volume alert kind of came back here. You can see this big volume bar had a couple of days of low volume consolidation, and then today is when things really started to explode. So what I like about this one, besides obviously the volume that came in today, was it seems to be able to move pretty quickly. The worst thing that you could see happen is a big volume bar like that come in and then have a day where the price either goes sideways or worse yet down. So it's good to see that the correlation between volume is that the price has the ability to move pretty quickly. It looks like when the right amount hits it. So none of these where you see some huge massive volume bar and then you look up at the price and it's either barely budged or hasn't budged at all, or it's actually gone down. Big volume hit it, and then you can see there was some big price action today. So what I want to do is just map out a few supports and resistance levels. That way everybody has an idea of what to look for tomorrow and then next week. First we'll start off with supports. The first support to keep your eye on, and that is pretty important after today's action, is this previous high level here at 25 cents. So I'll get that changed here to green to represent support. And let me scrunch this up a little bit like this. And then the next level of support that I'm going to map out comes from right here, and that's kind of twofold, and I'll explain that in just a second. This is what I'll call the must-hold level of support, meaning that the first level that I just pointed out is more of an ideal level, but at this point here at 20 cents, very important for two reasons. One, you can see that multiple times during the past it got knocked down at this level, meaning it was resistance. And then also when we look here, the 200-day simple moving average is 19.5 cents, so we'll just round up. So this orange line here is basically also 20 cents. So this is a key level of support. And I'm sure nobody would want to see it drop down there, but just to point out real quick, let's say it does come down here, find support before heading back up. Well, this set of lows is obviously higher than this set, and then when we would connect them, you would get an uptrend line. So that's why it still would be okay for the price to come down here as long as this level does hold. Now in terms of resistance levels, I got to go back here a little bit just to kind of point out some areas which are right here. You can see multiple times at 30 cents the price has come up here and hit its head yesterday. Intraday it did get above it, but because we're looking at the daily chart, we care about where the price actually closes. So intraday broke above it, but since the price ended up closing below it, 30 cents is going to be the key level of resistance. And then after that one, as you can see, resistance levels really thin out, and it could get moving even quicker. So 30 cents is going to be that key level, and then after that, like I just showed, the spaces between resistance levels begin to thin out pretty big. So if there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from big boards down to penny stocks. So there's a good variety, something for everybody. It is all free. We've been making some good money together on our alerts. So I'd encourage you to go to the website, sign up, and see what it's all about. One more time, this was XYTS. Thanks for listening.